Good morning, this is Data Explorers and I'm Jessica Johnson. The front page of the business section of the Daily Telegraph yesterday contained an article that said short sellers were burnt as banks surged, describing the banks in the UK's astounding recovery with the largest one-day surge in 4 months after Citi upgraded Lloyds banking group, and hopes gathered that President Barack Obama's plan to absorb toxic assets would stabilise lenders' balance sheets. The article contained our data, which stipulated that 2.3% of Barclays shares were borrowed between Tuesday and Friday of last week, as the bank's stock went into freefall, catching short investors off guard. Our data also showed that 0.02, very small amount, of the stock was bought back on Monday, when some 5.79% remains on loan. Stock specific now, and everybody knows that Xstrata was the big news yesterday, announcing a heavily discounted 2-for-1 rights issue to raise £4.5 billion on Thursday, and also the mining company said that pre-tax profits had fallen 36% year on year in 2008. As you can see from this graph of the percentage of Xstrata's shares outstanding on loan, the short position is extremely low at 1.1%. But short investors have come to the trade and started to increase their positions over the last month. Utilisation, the percentage of the supply out on loan, has increased from 4.5 to 6.5% over the last fortnight as well. And the recent spike in this figure, you can see in the graph of the shares outstanding on loan, shows and corresponds a higher than average amount of volume of shares traded, 22 million as opposed to the monthly average of 10 million shares. Elsewhere in the sector, and in the UK, Vedanta shed 10 to 585p yesterday after JP Morgan Cazenove analysts downgraded the whole sector from neutral to overweight. We spoke about Vedanta 2 weeks ago, and since then the percentage of its shares outstanding on loan has gone from 4.65% to 4.5%, with utilisation dropping from 42.5 to 39.5 in the same time frame, so a small amount of short covering there. Also in the UK, Rio Tinto has said that it will not rule out the potential to issue equity as one of the options it has available, following mounting speculation that it was about to announce a rights issue. The company currently has 0.86% of its shares outstanding on loan, so a very small percentage there. And finally, over in the US, Titanium Metals has seen a large amount of short covering, down from 11% of its shares on loan in September to 6% now, so it was almost halved. And utilisation was extremely high in the same month at 75%, and it is now down to 50%, which still means that a fair amount of its supply is being held by short investors. For more information, please visit www.dataexplorers.com. Many thanks. Bye-bye.